Welcome, dear traders. Stock markets were gripped by pessimism on a Friday. US stock indexes went down while Treasury yields rose. Trading volumes in the Asian session were also low as the traders remained cautious. US stock as well as Australian and Japanese stocks were gradually dropping amid market uncertainty. The US Producer Price Index, excluding food and energy prices, increased by 0.4% in November. The October reading was also upwardly revised by 0.1%. On an annual basis, the figure is somewhat better. The index decreased to 6.2% from 6.8%. Both monthly and annual indicators surpassed market forecasts. It confirms the fact that inflation is more persistent than analysts have assumed. Notably, preliminary reports pointed to a resilient economy and a stable labor market. A rise in the Producer Price Index could be a solid argument for the Fed to stick to more aggressive tightening. Usually, the PPI outstrips the CPI by 3 or 4 months. The Consumer Price Index for November is on a tap on Tuesday. Since June, the indicator has already dropped to 7.7% from 9.1%. Currently, about 77% of speculators are betting on a 50 basis point rate hike after 4 consecutive 75 basis point rate increases. Besides, they are also worried that the Fed will be unable to engineer a soft landing and avoid a recession. This is why one should not count on a slowdown in the monetary tightening. The Fed is likely to make hawkish statements, dispelling rumors about the pause in the tightening cycle. Now, traders want to receive answers to the questions. To what range is the Fed going to hike the key rate? How long will it take to reach it? They also wonder for how long the interest rate could remain there. It's not surprising that investors are now cautious. They are waiting for more clues. As the risk-on sentiment has declined again, speculators prefer safe-haven currencies. The US dollar kicked off the week near the level of 105. It was trading at 104.90 versus its main rivals. Given that investors have already priced in a 50 basis point rate hike, the greenback might be rather volatile during the next few days. Apart from the Fed, many other major central banks such as the ECB, the Bank of England and the Swiss National Bank will announce their rate decisions. Today, the euro made an attempt to climb against the greenback but failed. The pound sterling, the Aussie and Kiwi are also unable to assert strength. Nevertheless, the US dollar was moving in the range of 104.70 and 105.20, unable to rise higher. Investors are now hesitant to open new positions because of a market uncertainty. The low trading volumes can also be traced by the movements of the US government bond yields after moving up from the 3-month low on Friday. They remained almost unchanged today. It helped the yen advance slightly. In the Asian session, the yen was trading in the price channel of 136.5 and 137.10 amid the Bank of Japan ultra-soft stance, moderate growth of the greenback, and expectations of a small rate hike by the Fed. The dollar-yen pair is trading now without a clear-cut trend. However, there is a likelihood of an increase as long as the dovish expectations prevail. Given that stocks have recently been sensitive to dovish signals and comments from the Fed, this may also help the yen grow. The yen made an unsuccessful attempt to climb versus the US currency. Recession fears and the market uncertainty ahead of a crucial macro stats are boosting demand for the US dollar as a safe haven asset. On a Monday morning, the dollar-yen pair was hovering at 136.90. Commodity currencies weakened significantly due to risk aversion. Against this background, the VOC is declining to the psychologically important level of 0.6760. Currently, there are no drivers from China or the Reserve Bank of Australia. Philip Lowe will deliver a speech on Wednesday. He is expected to speak about the RBA's rate decision as its first meeting in 2023. As for the COVID situation in China, the easing of restrictions may lead to a quicker opening of the economy and stimulate its expansion. However, demand in China for Australian goods remains low. Analysts are also casting doubt on a fast recovery. The AUD USD pair is moving in the bearish corridor of 0.6757 and 0.6804. It has already tumbled to 0.6781. Its downward movement is likely to persist as the risk of sentiment remains strong. The Kiwi is also facing bearish pressure. At first, it jumped above 0.6401 shortly after it weakened. However, it managed to rebound from 0.6380 and rise to 0.6410. A bit later, the NZD-USD pair slid into a downward range, fluctuating near the support level of 0.6380 and the resistance level of 0.6416. Further decline may lead to a breakout of the early December lows of 0.63 and 0.6233. If so, it could approach the support level of 0.62. If the pair breaks above the resistance level of 0.6470, it will face the psychologically important level of 0.65, as well as a high of 0.6576, locked on June 3. And that's all for now. Subscribe to our channel and stay up to date with the latest market news. See you soon!